The Bank of Canada maintaining its key interest rate at 5%, where it has been since last July. Although the central bank is standing pat, it says it is beginning to see the economic conditions that could lead to lower interest rates. So let's bring in CBC business reporter Anis Hadari with more on this, on the decision and what the central bank is saying about it, because that's key, Anis. We really wanted to hear if there could be any hints. Let's listen in.
Interest rates aren't changing. The Bank of Canada is leaving its key interest rate at 5%, and that's what most major economists in Canada were predicting. So today's announcement is no surprise. The bank has said it still thinks inflation is too high, but the numbers it looks at, called core inflation, those have started to ease up. So while it's not lowering interest rates today, that is a positive sign. The bank has said it wants to see that this easing up, that it has a bit of momentum, and that it continues before the bank pulls the trigger on cutting rates. Now, right now, overall inflation is way down from the highs of 2022, but it is still at the higher edge of that 2 to 3% range that is the Bank of Canada's target. Another big piece of the economic puzzle came out today, the bank's monetary policy report. That comes out 4 times a year. It's the central bank's report on what they expect for the Canadian economy in general, and it says, as of today, economic growth has stalled and that the labor market is, let's say, cooling off a bit. Employment has been going up more slowly than the actual working population has been going up. So that means unemployment has been going up too. All this is a part of what looks like a softening economy, which many economists will predict, or are predicting, could lead to interest rate cuts, potentially the next time the Bank of Canada makes an announcement in early June. Anis Hadari, CBC News, Calgary.